Good morning, traders and investors. This is Joel Alconin with Wednesday's edition of Pre-Market Info.
Yes, it's pre-market info. I can't wait.
Hump Day.
Oh, it is Wednesday. Good call, Joel. On
Guess
top of your
what
game
day
this morning.
it is?
It's almost the weekend.
That's what the hump I think means. You approach this crest and then you start going on your way down. The downside being the weekend. Yes, I think that is the idea.
And when you were in college, didn't you consider Wednesday the only weekday?
Tuesday.
Tuesday and Wednesday.
Tuesday and Wednesday. Yeah.
Okay. All right. So what do we got going on in the markets today?
It's pretty quiet out there, but nonetheless, let me get you a futures check. S&P 500 trading down about 7 points. Last trade, I see 1757.50. Dow Jones trading down about 60 to 15,650. Nasdaq trading down, leading the move lower, down 14 to 3,350. Crude oil is trading up about 0.33%. Crude last trade at 93.42. Gold is also trading higher, however, has moved lower over just last few minutes. Gold last at 12.75. Who else we got on the line today? We got Joe, we got Dennis. Dennis, are you out there? Oh,
Yeah,
there he
I'm
is.
here. Brent just was looking at those Macy's breaking numbers, and I got some retail stocks popping, which we'll get to here in a second. But Macy's blowing the numbers away just a few minutes ago here. So,
Yeah, what's the stock doing right now?
oh, Macy's, Joel, bring this one up. 49.30 right now after closing at 46.33. The number's 47 cents versus 39 cents, and 6.28 billion versus 6.2 billion. And holy cow, it is flying this morning. I don't think anybody thought Macy's was going to get that kind of lift. I'm noticing even other retailers like Nordstrom's popping, Kohl's popping now. Just looking, Dillard's is popping up here, so you've got a lot of retailers that are trading higher here despite the market trading down 7 points. Joel's trying to get the Macy's symbol.
Yeah, we gotta
Fights
do.
with one
We got.
sing-
Yeah. I can't. I gotta be careful what I say here on the line here. But Dennis, I saw your quotes in Reuters yesterday. What was that all about? You can't.
Oh, I was getting a little bearish. You notice everything. I can't get nothing past you. So, yeah, I just said, we've had this period of consolidation here between 1765, 1769 for quite some time. I've been listening to you on that 1762 number. We took that number out yesterday. Did close fairly strong, but I still didn't like the fact that we had kind of broken to the downside. We had a little shakeout there yesterday, but here we come in today, and we're down now almost 9 points. 9 points.
Well, you know how I always make my bearish prognostications with actually no justification, but actually I do have some levels to support my often wanton analysis here. We've had four of the last five closes between 1765 and 1767.50, 67.50 being your all-time high close ever. Now you make a 1766 in the pre-market here, and now we are going down. We are through Tuesday's low. I see very little support in the 1750 handle and the 1740 handle until you get down to Friday's low at 1736.50.
Holy cow, that's a bearish scenario here. 20 more points. You think we got gas to do that?
Well, I mean, probably not today, and probably, we'll probably do it on Monday because I got some weekly spider puts on. So that's probably the scenario. But until we get back and close above that 1767.50, then I think we're in a world of hurt here.
Well, not everything is in a world of hurt. We have the gold trade coming back. Look at gold responding how it should. When the market's down, gold's supposed to go up, and that's exactly what's happening today. We got the gold futures trading up here about $4.
Yeah, just a little bit of a bounce here. Gold in its familiar pattern of, a big day, which you had 4 sessions ago when you went through that $1,300 level. Then kind of a quiet 2 days heading to the downside. I'd keep an eye on that 1260.50 if you're a swing trader trying to pick a bottom here. That gives you $17 lead here. Risk reward ratio, maybe take it back up to 1300, but I'm just not convinced yet about this gold rally.
And then crude bucking the trend. It's always down 40 cents. I feel like every morning I come in, but not today. It's up 40 cents.
Made a new low of the move yesterday. Had a lot of support in the 94 handle. Went crashing through that yesterday. Former low of the move 93.07 made a 92.93 low yesterday. So still call 93 major support until we get a close below 93. I'm not looking for another major leg down. The next support level is 92.01, but 93, that's still the support level in crude.
Well, we're seeing a lot of weakness across the board, but not with the retailers after these great Macy's numbers. We talked about them at the top of the show here. Macy's trading up to 48.92 right now, giving a lift to a lot of other retailers here as well in the pre-market. This is a stock they were kind of leaning the wrong way yesterday. Closed near the lows, 46.33. The low of the day was 46.30. But lo and behold, they come out, blow the numbers away, and now we're getting up into this whole $50 area. Well, I guess we're still a buck away from there, but that's where we've struggled here back in July, was at 50. So I don't know if Joel can get her up there or not, but what's going on?
49.83 pre-market high. You take a look at this on a longer term perspective here. That $50 level is just absolutely enormous. We're still $1.30 away from there. You also had a triple top at the 49.50 level. I mean, I'm just of the persuasion on this one, Dennis. This is just too much on too little volume.
Yeah, it is light volume. Well, 171,000 shares, so a few shares, but it is drifting down. What was the pre-market high here, Joel? 49.83? Did we just hit that?
Yep.
Wow, because that's what my system's telling me too. 49.83. So here you are, and there was somebody buying it all the way up, almost to that $50 resistance. That got overdone, and they're regretting that already with the stock trading at 48.70, a dollar down from those pre-market highs. But you are getting a lift in the retailers across the board. Kohl's, KSS trading up here, just kissed up, no pun intended, to 58.50 here, up 90 cents. So Kohl's getting a nice lift here off of these Macy's numbers.
And J.C. Penney's up a nickel.
J.C. Penney's participating even. You know it's a strong retailer rally when J.C. Penney's participating as well.
You got carried away here. 58. Well, maybe not. 58.51 pre-market high. We just got a print there at 58.50. I assume it's offered there at that 58.50 there, isn't it, Dennis? It's
58.90 offered. So
okay.
They're a little bit higher, but it's pretty wide market here. 58 to 58.90, just 100 shares by 400 shares. So not a lot of volume on this one.
Okay, the recent high of the move, 58.93. So your 58.90 offer is backed up by that 58.93 high that you had on November 4th.
You also got Dillard's getting a lift here, at least bid up in the pre-market. It's bid at $84.20, closed at $84. I believe that they do report this week too, so we will probably be getting those Dillard's earnings. I think if the team can look at it, they might even report tonight or tomorrow morning. But I remember seeing it when I was looking through the earnings. But it looks like it's going to open up here too.
The recent high of the move here in Dillard's department stores. Don't call it a double top, but 84.92 was the high yesterday. And then you go back to October 29th, you had an 85.09 high. That's your major resistance, still 80 cents away from that level.
And Nordstrom, JWN, sticking with the retailer theme here this morning, up at 62.15 and bid there right now. Best offers up at 62.70. Here's a stock that has been kind of marching up, and it looks like that march might continue off those Macy's numbers.
Yesterday's high, 62.60. I mean, that's a long-term high in that stock. That's the only level you have to take a look at in the book. Let's see here, 62.60. No, you got another level. On July 19th, you got right up to that level, 62.70. So 62.60 to 70, a big area to keep an eye on. And if you're really bullish and you're looking for the all-time high, that's 63.34.
Well, we have a rally in the retailers here this morning, but everything else is weak, and we're continuing to see a sell-off in the financials. The financials were probably the weakest sector, one of the weakest sectors yesterday, along with energy. A lot of your financials were down 50 cents a dollar. Citigroup was one that was very weak here. It is trading down 30 cents here in the pre-market at 49.16 right now. So there was a little bit of follow-through on that financial weakness from yesterday.
Ooh, look at this daily chart here. Oh my gosh. Look at all those lows between 47.60 and 47.80. Still too far away from, well, here. That's on a longer term chart. On a shorter term chart, you're going through a double bottom here at
Yeah.
49.35.36. That's the level you were looking at. I was imagining the monthlies here, but you're through that double bottom, so that's going to act as resistance on any kind of rally if we ever do get a rally. Once you break below that level, you got another double bottom at 48.35.39, another low at 23. So could see a buck drop here in Citigroup this morning if the weakness continues.
And Wells Fargo weak yesterday too. This $43 level has been like the Great Wall of China for this stock to go through. It just cannot get through it. 3 days ago we tried again, got up to 42.96. 2 days ago got up to 42.86. Yesterday got only up to 42.75 and then started selling off. So, and Wells Fargo trading down another 27 cents here in this morning at 42.01.
You know, I was playing the weekly 42 puts and 42 and a half puts in this last week, and I did make a little bit of money on them. But then, then that move on Friday that just ripped that buck 20 move, so uncharacteristic for the stock. So it kind of got me off it. Thinking about the 42.50s, and then that $43 level came into play again on Friday. Monday, buyers stepped down. Tuesday, buyers stepped down here. I'm looking at a major support level at 41.76. I just see a tick here at 41.92. Yeah, keep an eye, folks. That double bottom, 41.71 in Wells Fargo.
Some of the other stocks that we're looking at, Goldman Sachs here, we'll just kind of fly through. But JP Morgan, I just want to talk about this one because it actually did not sell off that much yesterday. JP Morgan had a tight range, kind of held up, but there is resistance forming up here in the 54 area. That's not the case this morning, though. The stock is trading down 36 cents right now at 53.61.
JP Morgan, look at this. Two lows at 53.60, 53.70. That is where is it bid there, Dennis, or offered there?
And it's 53.61, 53.55 bid, 53.65 offer. So it looks like they're putting some pressure on this stock here this morning. Maybe you start getting through that area here, though, Joel. It starts to open up.
How much is it bid for there at 53.55?
1,200 shares, so very light, very light.
Really? And with the SPOOs down 9 points, where's the fair value calculation on
You're in that realm, I would say. JP Morgan's beta, usually it's a market beta, so give it, 0.5% to, maybe 0.75% here. That would put you in this 53.60 to 53.70 area, but again, with fair value, you got to consider the financials had weakness coming into yesterday, so they may be your relatively weak sector here again, which means that you could be down a little bit more than maybe a fair value would calculate it at.
Hit that bid, Dennis.
Hit that bid. Okay, hit that bid. Well, I didn't hit the bid. But.
Okay. You're probably offering it a penny above it, and then someone's going to knock it out, and then you're going to be crying.
Yeah, and then I'll say,
I didn't hit the bid. Yeah, exactly. Because look at the daily chart there below the 53.70. It's like a $2 ride.
No. I know. I look at that too, and it looks scary on the chart there from being, I don't know if you I would not want to be long this stock here. I don't know if I want to short it through there or not, but we'll have to see if it can start getting into that vacuum area. We know that stocks can move when they get in those vacuum areas.
Okay. What else? Any other weak financials out there?
Well, no other weak financials here, but we did see some weakness in a lot of stocks yesterday, but we also saw a little bit of strength. Tesla kind of held up here yesterday. Not bad considering that the market was down, but it did close near the lows. And this morning, Tesla is actually rallying here, up $2.81. Is there news there on Tesla? I never actually looked there.
I think the news was, Musk was on TV yesterday.
He was on CNBC last night, definitely making some comments. Typical Elon Musk, talking about his vision for the future in general. And I think it was, kind of the classic Elon Musk, rally where traders are getting excited about, who's at the head of the operation rather than the operation itself.
Yeah, I think he gave one of those scenarios that, I think short term it may be overvalued, but long term it's a good value. So, what the heck that means. But when I'm looking at, there's a very definite level here. I've been looking at this level for the last couple days. One of our buddies here, our intern Luke, if you're listening, I still hope you're holding that short there at 160. This $145 level, you've had 3 tops right around 145. You got up there again yesterday. Until it gets above 145 here, I think we're still going to go down and maybe test the low of the move at 132.32. So traders, please keep an eye on 145 in Tesla.
Look at Apple here too. Kind of relative strength yesterday. It was trading up to 523.92. Did pull back, close kind of in the middle of the range of 520.01. But this has quietly been holding up pretty well here. What do you think of this Apple chart?
You know, I think Nick Shaheen mentioned yesterday about kind of the icon, the icon put, the icon saver here. Also that they're buying back stock. I mean, just looking at this chart here, I mean, may look at some strangles here today because you've had 10 days where you've traded between 512 and 528. That's just not right. That just this thing should make a move. I think on declines, you get the company buying back the stock, and you got people worried about Icon tweeting out, and I think they should up their buyback to 987 billion or something like that. So I think people just are not willing to whoop up on this stock as much as some of the other ones. It's been beat up last year and stuff. So this is one that on the declines, I think it's just going to hold up a little bit better than the relative market.
Joel, I just noticed that your Carl Icahn voice is the same as your Dennis Dig voice. I don't know what's up with that. It's just
start mixing it up there, Joel.
You gotta have a new Icon voice.
Okay, I'll work on that. I have to listen to him a little bit more. I listen to Dennis so much, it's easy to imitate him, but I'll work on my Carl Icahn. I also got a few other impersonations that I'll break out in later broadcasts.
Ooh. Oh, boy.
You guys ever heard of Ed Sullivan?
Yeah. Yep.
All right, I'll save that for a later show.
Oh, we were all excited to hear Ed Sullivan. So disappointed.
We got a really big shoe tonight in the pre-market show.
I don't know. I'll give you about a 6 on that one, Joel.
Okay.
Google, you've been waiting for this thing to break down. It keeps hanging out here at 1,008. It wants to go to 1,000. You think it wants to go to 1,000 anyways, but the market doesn't want to let it go to 1,000. Somebody is defending this area in just above the $1,000 area. Got down to $1,005 yesterday, but closed up strong, 1,011.78, and it's trading just flat here this morning.
Right. I was looking at those 1,000 puts yesterday, and then when we were doing that interview with Nick Shaheen, he mentioned that everybody was looking at that 1,008 level, and I just felt I was in with the crowd there. So it did get to 1,005. I would have gotten excited, but then it rallied up to 1,017 and change. So I'll keep an eye on this 1,005 level. I mean, there's relative weakness in the market, but it's not really getting hit. So I think what you're going to need, I mean, someone who was in Morgan Stanley the other day took it off their best ideas ever to stock that you have to buy list or whatever. Yeah, it was Morgan. So I don't know. I think it's going to take a couple downgrades or something like that to get it to the century mark.
All right, Facebook. Is that a double bottom? You think a tradable double bottom there, Joe? I'm looking at the 45.73 and the 45.83 level from the last 2 days. Is that a tradable double bottom?
Of course it's a tradable double bottom. You whack it when it goes through there.
Oh, he likes to get no such thing as a triple bottom. He likes to take it down the downside. But I look at that, and it had some decent relative strength there yesterday. It started popping up. It looked like it was strong, despite the market being down for most of the day. So what do you think here on the Facebook?
A rare day in Facebook here. You had the highs within 16 cents of each other, 47, 37, and 53. So there's your major resistance. And then you had the lows within a dime of each other, 45, 73 to 83. So I'll let it crank around between those two levels. I'd love to see it get back up in the higher 47s for a short. And just let our traders note here, we talk a lot about former support being resistance. You did have that 47.30 to 50 level holding up in 3 sessions before this week, and now it comes back to that level. It's acting a resistance. So long term, I don't think this thing has any hops to get back anywhere near 50 until we clear that 47.50 level.
One more. We got to talk about Twitter. Twitter here, 41.90 the close there yesterday, so it's hanging out above this $40 area. We're down 50 cents here in the pre-market, 41.45. What are the levels you're looking at there on the tweet monster?
Well, first of all, I am officially announcing that Twitter is in a bear market.
A bear market for Twitter. Okay, I want to hear why it's in a bear market.
Okay, and it's very easy. Let's go to the daily charts here and take a look. Okay, well, it's a bear market until it closes above 45. Let me qualify that. Opened at 44.10 on the first day of trading. Had that ridiculous spike up to 50.09 and closed at 44.90. So you had the open, even though it had a 6-point range on the opening day of trading, you had the open and the close within 20 cents. Okay, that's very significant to me. I don't put that much of a emphasis on the opening of a stock every day, but the IPO day is a big number. So I'm looking at that, and it had a little over a 6-point decline down to, it had a 11-point decline down to 39.40. So if you take the 50% retracement back up and that, it would come out about 44.70, 44.75. So that coincides with the opening price on the day of the IPO and the close. So until Twitter can get back and close above 45, then I'm putting my bid out at 26.01 to get long. There's no support.
He's sitting out there at $26 here. What was the low of the move so far? 39.40, you said?
The all-time low is 39.40. Well, until today, the all-time low was 39.
Until today, he's already. Joel's got his crystal ball there up for you. He's saying Twitter could have better days. We'll have to see how he does on that call.
What do you think long-term?
Valuation, this thing is crazy valued, but I don't know. Short term, I've just seen so many stocks go from crazy valuations to even more crazy valuations that I struggle to short any of these high flyers now. So I agree. If it stays below 45, it's tradable there, so you can try a short and see how you do. But starts to get above 45, I think I agree. There's a lot of air above 45, and you probably have some overhead resistance. And another reason, like you always say, the open. Why is the open relevant? Why is the close relevant? Why are those relevant numbers? Because those are large prints, and there's a lot of people, a lot of traders that will have positions on from those prices, and that's why Joel puts relevance into the open. Why he puts relevance into the close, and obviously you get technical. Or the 50% retracement, some people look at that too. So you have three reasons. If people bought the open, they bought the close that day, they're underwater, and there's a Fibonacci 50% retracement up there. So there's another reason too why that level has significance and why maybe Joel's bearish thesis here on Twitter might hold some water.
Right, and you also have a lot of people that do strictly quantitative analysis, and they base it on their parameters, on longer term moving averages or closes or whatever. And there's a lot of traders out there that are just buy on the open, sell on the close, or vice versa. So those prices are really. The closing price is more important than the opening price, but since that was the first day of trading and they were at the same level, that's why I give that double, super, triple significance.
Let's move on to the wild child. NQ reported earnings there last night. 28 cents versus 27 cents, and 54.2 million versus 51.2 million. So they beat on the top, they beat on the bottom. NQ actually did spike off those results after hours, but has turned around and gave it all back there late last night and is trading down here again this morning on 117,000 shares. It is down 60 cents here in the pre-market.
Dennis, actually what happened is company, right before the earnings came out, the company issued a release announcing a senior management share purchase plan, so disclosing that a couple of their execs are going to be buying up to $3 million in ADS. That is when the stock spiked, and then as the results came out, that's when they started tanking, and then kind of subsequently bounced after the low at 12.67.
What is the pre-market and after-hours range there, Joel?
You got a spike over the $15 level here. Let's see. Let me pull it up. You had a high in the after hours. You got up to 15.24, and then after 15.24, you spiked all the way down to 13.30. And now you just seem to be doing a lot of wicked trading here between 13.50 and 14. So the numbers didn't blow people away.
Definitely not. But did they need to blow people away? I think people just want to see the dang thing make money after that Muddy Waters report.
Right.
They beat the penny. They beat by a penny, so it wasn't terrible.
You got a kind of an interesting thing going here since you made that low at 758. You've made a high just under 16 at 1585 here. So call that what a little over an 8 point move, a little over change. So 8, 4, 11.50, $12. I'd like to see this thing come down to, if it comes down to the 12 level and holds for a couple days, then I think the worst could be over for this. Comes back down to that 12 level, boom, takes it out. We could be going back to muddy waters, territory there at zero.
Well, you got an interesting range here the last couple of days because 4 days ago we were kicking down near the $10 area, and then obviously last night we got into the 15 handle. So, yeah, you're sitting at 1370. So I guess you're kind of in the middle here somewhere. I'm still sitting on my hands on this one. This one is just a tough one. Trades off headlines still, and we'll have to let the earnings digest to see if we can get some tradable levels in this thing.
Management has really been playing to that headline risk thing, though. I mean, the reaction in the stock last night after the news of that repurchase plan, and then over the last few days, the company's been issuing all these releases saying, yeah, we put the money into our standard charter account. You can definitely tell management, is doing its part at least to try to negate those muddy waters charges.
Yeah, they're definitely aware, and they're definitely trying to defend their stock, which you'd expect them to do. And the market's still defending it quite well too. Obviously, what was the low there we made after the muddy waters? What did we get down, like $7 or something?
758.
7.58. So we've been from like $23 when Muddy Waters broke that report down to $7.58, back up to 15. So what is the 50% retracement on that? That's got to be around.
I was just scrambling to hear from my calculator here.
Do your air math there, Joel.
Yeah, back in when I was in school, we had abacus to do this, but let me let me see here. Going to my mighty calculator.
Should be able to just like move, the air, like manipulate.
Yeah, 1674. 1674. So we haven't even sniffed that level yet, and also that $12 level, the 50% of that rally that you have from 758 up to 1585. So and also significance here with that $12 level, you had just below that, you had 4 consecutive highs at the 1150 level from 1130 to 1174. I just think without bad earnings here and no more negative news coming out now, I think the shorts are going to use any kind of declines here to kind of cover their positions.
Your favorite sandwich shop, Potbelly there, Joel. PBPB reported earnings, and they were good. You must have been eating there a lot. 15 cents versus 9 cents, 78 versus 77.9 million. This stock is up 12.7% on this report. It's trading $30.50 right now after closing at 27.06. So Potbelly shareholders getting a little bit fatter here this morning.
We have Potbelly's probably about 3 out of 5 days on the news desk. So I'm thinking some of this upside is related to the Benzinga news desk. No problem, Potbelly. Don't worry about it.
It's
Got your back.
It's kind of the rich man's Subway, we do order from there. The same store sales at 12 and Telegraph are up 97%. So that's really until like.
Yeah, I think Brent's a line item on that company's report.
I guess I will rate Potbelly's as a buy until I find a fly in my chicken salad or something. But let's take a look at what it's doing in the pre-market. It got over the $30 level here, Dennis. Things really got carried away. $30.99 is a pre-market high. I'll keep an eye on that level. Since hitting that $30.99 level, someone's been defending this stock at $30. So 30 to 31 could be a yo-yo, trading right in the middle at 30.50. You break below 30, and you may wanna head for the exits.
Your loser of the day, YRCW. YRC Worldwide trading down 26% right now on their earnings report. They lose $4.45. Is that right, Benzinga News Team? $4.45 against estimates of 46. Must have been some one-time stuff in there.
I couldn't find any adjustments in the release.
Well, that's a disaster.
Yeah, doesn't look good.
Doesn't look good for
Keep
shareholders.
in mind, yeah, I mean that's a gap number. There's no way that
Yeah,
we don't think that's comparable. But if you look at their loss of the prior quarter, in that case, it is comparable. So we were a little bit confused. There was no adjusted number that came through, so we're kind of keeping an eye on that, seeing if if the company releases some adjusted number or something like that.
It's scary when $7 stocks are losing $4.45 in a quarter. That doesn't give them a lot of quarters to stay alive if they continue to lose money at that pace. So hopefully they got a game plan to not continue to lose that kind of money. But shareholders are very concerned here this morning, and the stock is trading down $2.50 here in the pre-market. And Joel?
Got an interesting pre-market chart here. You've dipped under $7 and just
chart?
yeah.
Falling off the cliff chart.
Well, no, you're finding support here, Dennis.
Oh yeah, okay. Joel can always find the
I found that support in SRPT yesterday.
Yeah, that was a good one there, Joel. Call it all the way to zero.
Yeah, but you are getting a rounding bottom here off the 675 level, so you are trading 50 cents above that. So if those buyers are out in the after hours in the pre-market buying at 680 to 695, I'd expect them to be there during the regular session as well. And well, I mean, it just has a terrible stock symbol, YRCW. I mean, Brent can't even get what's that, yellow whatever Yango.
What does YRC stand for? Does anybody know if that stands for something? Like they call themselves YRC Worldwide, but
what do they do, Dennis?
Like I know what anything. I'm a trader. We don't know fundamentals. We know then we just need to know basics here. We need to know the technicals, and we need to know that it's weak today. $2.50 relative weakness. This is how you trade, folks. You keep it simple. You don't even need to know fundamentals half the time.
Look at this.
YRC is a shipper, just so everyone knows. I'm on it. I'll look to see what
I'm curious what the letters stand for. We'll let the Brent Benzinga News team hunt down what YRC stands for. It stands not for anything good here today. $2.50 down. Wow. So not good here for YRC shareholders. Not all bad news though. Canadian Solar, CSIQ, continuing its run, and they're a solar company there, Joel. I do know Canadian Solar is a solar company. CSIQ. 29.08 right now. They blew the numbers away actually. 56 cents versus 36 cents. 490 versus 480 million. So up over $10 million on the revenue number. And the stock, I believe, was kissing up there. What's up after hours high there, Joel?
We got up over the $30 level here. We got up to 30 and a quarter. Since then, we've pulled back under 28.50 to 28.52. So those are pretty wide ranges in this. Now looking at the daily chart, this thing had multiple highs right under the $30 level, $29.90, $29.78. So I'd be keeping an eye on that as a potential resistance point. Coming out of the OptionsHouse chat room, we got a question here on Lululemon. Dennis, have you
There's news on that today too, actually. I believe I have it on here. It was initiated overweight at JP Morgan this morning. So
$84 price target on that one too. I was literally just writing up a report on that. JP Morgan basically just saying that the company's having trouble with a ton of like PR nightmares this year, but fundamentally it's still a strong story. The new CEO and an opening of a European store this year is going to show some serious growth. I think JPM's getting kind of bullish on the company going more worldwide with its operation. They're also expecting mid-teens growth for its online segment. So I think they're thinking it's going to start monetizing internet sales a lot more as well.
I was surprised that JP Morgan didn't have coverage on this name.
Yeah, that is surprising actually.
Looking at the
was weak yesterday.
Pre-market high 68.45, just settling in here, not doing a lot after hitting that 68.45 high, just sitting at 68.24. Looking at the daily chart here, the stock is probably going to find some major resistance here at the $70 level. 70.19 was a double top going back to the 6th and the 7th. They also had another high, a little bit more of a tradable high at 69.21. So I thought the news was they were going to bring back see-through yoga pants.
That's got to be good for the company if they're. Either way, they were kind of leaning the wrong way yesterday because this thing was weak going into this upgrade here, and obviously now everybody's shorts are scrambling a little bit here. I'd keep an eye on that. Yesterday's high at 69.21, but all kinds of over resistance up there at 70. I think I agree that you're going to run into some trouble here when you get into the 69 handle.
And you got a really nice level on the downside too, Dennis. Yesterday's low 66.21. You go back 6 trading sessions ago after that, you had a 66.35 low, and then going all the way back to middle of September, you had a low at 65.85. So hey, you swing traders, you want to use this lean on the $66 level. You can risk $2.25 here and maybe get it back up to 70, 72, but. Below 66, I believe that was it had that was the low. They had to decline. Someone left the company. They killed it, and then it started to rally back up. And the day after that, that low was 65.86. So got some good numbers in Lululemon.
Brent, being the hero that he is saying Yellow Roadway Corp. That's what it stands for. YRC Worldwide Yellow Roadway Corp. So everybody learned something here today. Looking here, Joel, let's move on to pair trade, NUEX. Morgan Stanley upgrading X, downgrading NUE. So these brokers here, they're looking and they're becoming pair traders here. You're seeing this more and more where they upgrade one stock and downgrade another stock. And you got X trading higher and you got NUE trading down on that Morgan Stanley rating moves.
Don't know if how you would actually play this pair. Looking at, let's see, NUE. Not sure. How could they do that? Don't they know your stocks in the same sector go the same way? I mean, I don't understand that. But it's flat. The NUE is flat. Boy, this stock has had a nice move. Major resistance up at the 54.63 to 73 level. So if it continues to go into rally mode, I would keep an eye on that. X here on the downside, major support at just over the $26 level, and then major resistance up at the 27, call it 50, because you had multiple highs between 27.41 and 27.66. So in the pre-market too, in NUE, let's see how high you got in here in the pre-market. Got a spike, not much pre-market trading in NUE.
Yeah, well, it's trading down. It's offered down here at 53.37 with the downgrade. So looks like it's going to open a little bit weaker here. And yesterday's low was 53.33. So if we take that out, then that could get interesting here too. And usually Morgan Stanley's got a lot of weight there, so it wouldn't surprise me if we did take out that low. Just looking here back, Red Hat upgraded at Piper Jaffray. So, and it's trading up over $1 right now. It's stock we haven't talked about in a while, but this Red Hat chart, you talk about consolidation. We had a nice period of consolidation from October, November, and we are starting to break out from that $45 level here today. So here's a breakout stock.
45.65 is what you've hit in the pre-market, a buck rally, some volume with this, not a ton. Yeah, you did. You break out above the 45, so if it comes back down to 45, that's going to be your support point here. Nice rounding bottom here formation. Moving up on the upside here, you haven't had a trade up here above 45 in quite some time. You just snuck above that level one time. In October, you had a 45.71 high on October 7th, so that's what we'll be keeping an eye on. Above that, you could get into the 46 handle. 46.45 was your high on October 1st.
Brent's telling me we better cover Yum here this morning too. They did come out with their China comps there last night. Brent, you got those China comps from Yum?
Yeah, sure. Let me pull them up really quick. The stock initially traded higher. This is what I was highlighting to you in the chat, Dennis. 72.78 last night. Is trading around 70.55 right now. Bit of a mixed reaction. This data usually comes out in an 8K, and that's what happened last night. Yum saying that Chinese comps were down 5% in October. I think the street was looking for something like at
5.2 or
5.8%,
something. Yeah.
5.9%
I
decline.
had 5.2, but
5.2.
you might be
Okay,
right though.
so it was a little better than expected, but nonetheless, stock selling off this morning.
Yeah, and it did get a spike up there, and it's actually been pretty wild here in the pre-market. Just even today, it's traded some serious stock of trade at $72. So with looks like about 5,000 shares up there, but then has sold off, like you said, just 100 shares trade at 70.55. So don't put a lot of weight into that print, and it is bid
Gotcha.
at 71 right now. So you're 71 to 71.53. So you are looking weaker here, but I mean the market overall is weaker as well.
Got an important formation here on the downside. Monday and Tuesday's low 70.61, 70.71, the double bottom. Light print there at 70.55. So I mean, they took it both ways off this news, but the way I'd be looking at it is I'd hang in on the long side until it took out to 70.60, because below that you have over a buck drop into the 69 handle.
Futures down 9.5 points now, so we are still treading down here. 17.55.50 right now. We just made a low of 17.54 1/4 here. So Joel, you only got what 18 points to go for your 17.37 price target.
What I would really like to see here is we just hang right here and just pound through that 17.54 1/4 low. So many times, no. So how many times have you seen this when the spoos are down, 8, 9, 10 points? You have the pre-market low at 54 1/4. They get you excited. They take it down to 54 1/2. And then they turn around and rally it. So as of right now, 45 minutes before the open, that's the level I'm taking a look at. Besides that, and I'm just being honest with our traders here, there's not a lot of great support points in the rest of the 1750 and the 1740 handle. Friday's low 1736.50. Coming back on the upside, I'd call Tuesday's low 58.50 only a minor resistance point.
Hey Dennis, so much for your upside in crude, down about 20 cents over just the last 2 minutes or so.
Wow,
Yep, nice
that's
little
the
spike
thing. It's
low.
always down 40 cents. Crude's always goes down. Now it's up 20 cents, so it's still up here. So, but yeah, giving back a little bit there on the crude. We're pulling back a bit.
Okay, we're going to take a quick break and bring our guest on, so we'll be right back with you. Welcome back, traders. This is Joel O'Connor of Pre-Market Info with Jarrett Lilien of Kapitall Company. Jarrett, how you doing today?
Good, thanks. How are you?
We're doing well. Well, we have traders and we have long-term investors. We got a lot of different people that we've interviewed on the show, but I can tell this is going to be a fun one discussing your company here at Kapitall. Could you just give us a little bit on your market and your education and your market background?
Sure. Education-wise, I went to the University of Vermont, got a degree in economics. After that, I have about a 30-year career, in and around Wall Street.
And what have you been doing around Wall Street for 30 years?
Yeah, before I went off on that, I wanted to make sure you sent me in a direction. I grew up in New York City, and my godfather, way back when, was a specialist on the New York Stock Exchange, and I always thought
connected.
I thought that was the coolest thing in the world, and that's what I wanted to.
Did we lose Jarrett?
Yep.
Am I still
no,
here?
You're there. Yeah, you're good.
Okay. Yeah, so when I was finishing up college, I went down to see him, and he basically told me that the game was over for the floor. I mean, he sort of saw it coming.
What year was this?
This was back in 1983.
The game was over for the floor in '83. He thought.
He thought, yeah, he saw.
Holy cow! This guy, he was really ahead of the game there. Saying that. Wow.
He was ahead of the game. So he told me that I needed to get a job on a trading desk because that's where the action was going, and that's what I did. And so I started as a block trader, and then I wanted to be an asset manager after a few years of doing that, and I got a job in equity research. And then I was still a young guy and just got tired of the pace of advancement at Wall Street firms, and sort of maybe young and naive, but started my own global stockbroker. This is back in 1989, and actually started that business in Japan, but it was global. We were in New York, London, Tokyo, Hong Kong, and we managed to be successful. I ran that business for 10 years and sold it to E-Trade.
Wow.
In 1999, and then eventually went on to be president and chief operating officer of E-Trade, and actually was acting CEO of E-Trade when I left there in 2008.
Wow. Impressive pedigree there.
Holy cow,
spitting it out. But okay, so Kapitall, you want to reinvent what it means to be an investor. I mean, that's a pretty big statement. Could you delve into that a little bit?
Yeah, sure. And for me, it's a little bit the way I see it. It's doing what E-Trade did before. I mean, I think E-Trade really reinvented, as did the other online brokers, what investing meant, and it was really all about a new user experience. But you look at the online players today, and that user experience is getting kind of old. So what Kapitall is all about is reinventing the user experience for today's investor, and really focused more on today's younger investor with a more modern experience. And an interesting thing, when you look at the average age of a customer at E-Trade or Ameritrade or Schwab or Fidelity, it's actually over 50 years old.
Oh, really?
So, not only are they focused on an older customer, but also that user experience, not a whole lot has changed in the last 15 years, although, here we are talking, over the internet, that, a lot has changed on the internet. The user experience from the current firms hasn't changed that much. So Kapitall is really using modern technology and the way people use technology today and applying that to the stock market.
So you're not actually shying away from the traditional fundamental and technical analysis. What you're trying to do is create a new platform, a new mode of communication.
Yeah, that's absolutely right. There are things, and this used to kill me when I first got to E-Trade in 1999. There was all this talk of a new economy where revenues and earnings didn't matter, and that was crazy. There was no such thing as a new economy. There's the old tried and true methods and, technical analysis, fundamental analysis. But, I kind of look at it, I'd say a lot of it is sort of, instead of tried and true, is a little tired and true. And it needs to be reinvented and modernized and just brought into today's world with how people not only use technology, but using the technology that's available to us today. So, on the site, just lots of little examples. But for instance, everything's drag and drop. Why not? That's a more intuitive way to do things. When you look at certain types of charts, rather than being static, they're more like videos, which if you go on and you see and use some of the tools, but in a more interactive visual way, is actually really useful. I find it is a great place. It's a great place for people that are new to the market because it's modern and it's not so intimidating. But it's also great for, an older, possibly dog. I can't believe I call myself that, but an older dog like me. I love it as well. So I think it really works for, the new to the market, but also the more sophisticated will really find the tools really helpful.
What is the website? Can you just give the website there?
Yeah, it's Kapitall.com, and Kapitall is, Kapitall.
Okay.
.com.
Just in case some of our listeners want to check it out right now.
Yeah, and becoming a member is free. And as a member, there's a bunch of, you can use basically the functionality by just signing up and becoming a member.
And what is so if we sign up and become a member, what kind of what do you get for that basically? Like what are we usage?
In the beginning, and this is why it's also good for people new to the market. One of the first things you get is a practice portfolio with virtual money in it. So
very cool.
Yeah, so you can go out and you can experiment, but you also can use the tools that are available, so you can do research. And it's not just research. What I find is something missing on sort of most of the financial websites out there is the ability to help you come up with ideas. This is a site where you spend time on it. There's one tool, well, first of all, there's a whole section of themes where if you're interested in, solar power, or you're interested in food stocks, or, whatever it is, you can find a theme that interests you. That'll give you some names to start to look at. There are some tools that if you like this name, you can drag that into the tool and say, show me other names or other companies that are like this. You find very quickly you're coming up with lots of ideas, and you're developing your own theme, and being able to research that theme. And then what you can do is sign up. There are really three modes today. One is practice, one is play. So there's a whole tournament, which is also with virtual money, but this is a little more fun and it's interactive with the rest of the community. And then there's real brokerage. So there's a real sort of progression on the platform today about learning and then practicing and playing and then actually doing it for real.
So it's really, you still have what you have on traditional platforms. You still have the charts and the fundamental information, but what you're trying to integrate other components into that give people a more well-rounded view of the sector or the stock that they're looking at. What about, like you mentioned, like old people like me and that 50 mark? I mean, are you looking to attract any of those people? Do you think they'll still stay with their traditional platforms? Is this something that's too complicated for people like me that didn't have computers when we were in college?
Well, and that's when I first came across Kapitall. So when I left E-Trade, I started up a venture group that focuses on new financial services technologies, and that's something called Bendigo Partners. And our our approach at Bendigo is where we invest in something, one or more of us go to work there. And so we invested in Kapitall, and that's how I got here now working here as CEO. But when I first saw it, so, at Bendigo, our theme for retail was that what's going to be next? What's going to be the next chapter? And as we all know, commissions are pretty cheap now. So trading is inexpensive, and, there's not much left to do there, and not much demand for lower price commissions from here. It used to be that speed, you could compete on speed, but now everyone's fast. It used to be you could compete on certain types of content, but now everyone has it. So what is the next chapter? And I think it's user experience. I think that user experience that's out there today is based on the web 15 years ago, and the web and everything around it and how people use the web has changed dramatically in not only the last 3 years, but certainly in the last 15 years. So when I first saw Kapitall, I thought, this is it. This is a dramatically different user experience. And anyone that goes on and gives it a try will see that this isn't, just an incremental change. This is a dramatic, night and day difference from existing experiences. And I consider myself a pretty sophisticated older investor, and I loved it. And so I think that it will speak to older investors as well. But then I also look at it, and it's really very modern, and I consider it to be really written in the language of a younger person. And so I think it really, speaks to a younger person, but it also has depth and the ability to kind of scale with you as you grow in sophistication, or if you already are more sophisticated. So I think you'd like it also.
Tell us about. It looks like to engage the people on your site, you have the Market Masters tournament, and you're trying to remove the intimidation factor from the process of investing. Tell us about the Market Masters tournament and how you're going to remove that intimidation factor. What is the intimidation factor, and how are you going to remove it in the process of investing?
Well, I think the intimidation factor. A lot of it. For a lot of people probably listening, certainly for us here talking, we're kind of old hands at the market. So, things like stock symbols are pretty, we accept them. But if you're new to the market or not that involved in the market, that's a new language that you have to learn. Stock charts, we're all used to looking at them, but for a first timer or someone who's not that heavily involved, right. That's a new language, and that's all an intimidation factor. So, Kapitall is about trying to remove those little roadblocks, because the markets, they're challenging, and you need to learn, and there's a skill, but it doesn't need to be so intimidating. And so things like Market Masters, which is a tournament where the community can play. One, it's another environment where you're learning and practicing. But here we've got a prize where the winner of the monthly tournament gets a shot at winning $100,000.
Oh,
and
wow.
So it's a lot of fun. There's something in it. And actually, we had the winner from last month's tournament yesterday. Was his chance to go for the $100,000, and basically he was so close. At 3:55, he was exactly on it, and it just moved away from him by 4 o'clock. But we almost had our first $100,000 winner.
Wow.
What does he do? Does he have to trade into the market, or how do you actually get that $100,000? Because first I saw it was $100,000 payout per month, and I'm like, holy smokes, that's a lot of money. But now you're saying you win the monthly contest and you get a chance to go for the $100,000. You said he had it at 355. Explain that to me.
Yeah, so it's a monthly tournament, and so the first challenge is. Pick your strategy, pick your stock. It could be a portfolio that you pick. You could trade your way there, but it's beating out the community to be the winner, the best performance for that month, and you start with $100,000 of virtual money. So, generally in a month right now, sort of maybe 1,500 people are competing. So the first challenge is to be, number one out of 1,500. That gets you a shot at calling the market on a particular day.
Okay.
So where's the market going to close? And we've had it's amazing because that's a pretty, first of all, it's a tall order to be the first out of that contest. But then it's a pretty tall order to call the market.
Right.
It's been amazing to me how close people have come. Yesterday was the closest, but we've had people that at 3 o'clock are right on it. Yesterday 3:55 he was right on it.
Wow.
Okay, so
pretty exciting stuff. I just want to ask too. Obviously, social media has been taking off here in the last few years now. How do you see social media fitting in? Are you planning any plans to integrate that into your platform as well?
Yeah, absolutely. So we plan to integrate it, but we also have our own social media. We've got our own community. One of the great features is being able to share your portfolio. So I can, choose to share. I can choose to share my portfolio with you. You can drag it out of the email that I send you onto your workspace, and it dynamically updates. So anytime I trade, you see it. And that's a great tool. But again, a great example of just using what's modern. And, what a great opportunity, the whole younger generation is, the millennials. And I think if you're a millennial, you probably don't call yourself that. But, a great segment of the population that is just now entering the marketplace. And, if you're going to cater to that demographic, social media is a core part of that.
Okay, well, we got to ask you here before we close out the interview, the Twitter IPO. I know we haven't talked a lot of stock specific here, but it seems that your platform, you're integrating social media into it, and of course, right now, Twitter is at the forefront of social media. Are you a buyer of this Twitter? Are you an observer, or is it gonna? Do you have it anytime soon? Be plans to be put in your portfolio?
Well, first of all, on Twitter, I think there are lots of angles on it. We have a integration with Twitter on Kapitall, where you can see just the tweets on your portfolio or just the tweets on a stock that you like, or you can also tweet yourself from the platform. I think the IPO, it's another example of basically the new world that really isn't that new anymore. I think for a lot of people, they're like, "Wow, this is the new world," but it's not. It's the world today. But I think the IPO is a coming of age for Twitter, and just another example of all the social media coming of age. With IPOs, especially hot ones, me personally. Unless I'm going to go in there and trade them, I like to sort of stay away and watch and watch them settle down. I have Twitter in my practice portfolio. That's as far as I've gotten so far. But I think the IPO was a good one. When I look at the Facebook IPO, that upset me a little bit because it just felt like the company got greedy. And what I learned from being in sort of retail, with here at Kapitall and before that at E-Trade, is you really need to look out for your customer, and that the customer is king cliche couldn't be more true. And if you don't believe in that, and you lose sight of that, and you don't put your customer first, it's to the detriment of your company. And in the case of a Facebook or a Twitter, I think the community is your customer. So I thought Twitter did it right. I think, I saw some criticism in the press that they left money on the table. I think they did it right. They should have left money on the table, money for their investors,
Right.
which is really their community, rather than kind of hogging it all up for themselves. So, I'm a fan. I'm a user, and I was happy with the way the IPO went.
Okay, we got Jarrett Lilien, a very good interview here with his company, Kapitall. We enjoyed it very much, giving us a different perspective on the markets, and we'd certainly like to have you back sometime.
Yeah, well, I'll look forward to it. Have a great day.
Thanks,
Okay,
Jared.
All right,
thank
see you
you.
guys.
I got a quick request here for a look at LVS, Las Vegas Sands here. Taking a look at the trading here in the pre-market. Not a lot going on. It's showing it down 33 cents here. So let's take a look at the daily chart for LVS. Multiple tops here at the 71.43 level. You hit that yesterday. Also hit that level on October 31st at 71.49. So that's your major resistance level. Coming back on the downside here, we are trading about 50 cents away from from Tuesday's low of 70.07. I'd call that minor support. I don't see the major support until you get closer down to the 69.30 level. You had three lows between 69.20 and 69.55 here, but this looks like a little period of consolidation after a nice run up in LVS.
There was a couple of new ratings from FBR Capital this morning. Looks positive, not sure about the downside. FBR started shares of Las Vegas Sands, MGM with an outperform rating. They started Boyd with a market perform rating, and they also started Wynn with a market perform rating. So Las Vegas Sands was one of the preferred stocks from FBR this morning.
Okay, we're gonna move on. I'm gonna call him Grumpy Mighty Joe Young because he was grumpy this morning. Are you a little bit better mood now, and you could give some news coverage?
Oh, well, I'm always in a pretty good mood, Joel, you know. It's just depends on what you come in and start up with every day.
Hopefully it's my computer.
Yeah, hopefully. Well, thanks for that, Joel. Thank you to Jarrett Lilien for coming on the show today. It was really great. And today we'll move on to today's editorial headlines from around the globe. The first tower at Ground Zero since the September 11th, 2001 attacks that destroyed the World Trade Center will open today, marking a comeback for the Lower Manhattan site. Sheathed in glass, 4 World Trade Center is the smallest of the 4 main towers on the site, where 2,700 people died when hijacked airplanes crashed into the towers. The tower stands at 977 feet tall, a shorter, simpler version of One World Trade Center, which will not be completed until early 2014. Microsoft has killed off an employment ranking system, which many believe is the root cause of a lot of bullish problems. Redmond ran a stack ranking system which forced managers to rank employees on a scale from top to poor. It meant that even if an employee was not that bad, they could be ranked poor simply because someone had to be at the bottom and someone else had to be at the top. RealD told investors it will bring to market 2D and 3D consumer electronics in 2014 as it tries to mitigate continued losses due to falling 3D ticket sales and market saturation in North America. Speaking Tuesday on an earnings conference call, RealD executives withheld most details of the electronics, saying only that they would most likely be with the mobile and tablet applications. Some of the electronics will be announced and others will come to market in 2014. The Federal Reserve should keep monetary policy ultra easy, giving the economy's tepid growth an uncertain outlook for jobs growth, 2 senior officials said on Tuesday, reinforcing views that the U.S. Central Bank will not taper bond buying before next year. At the same time, last month's government shutdown may undermine the reliability of economic data through December, said Dennis Lockhart, president of the Federal Reserve Bank of Atlanta. That could provide another reason not only to expect policy action when the Fed holds its next policy meeting on December 17th and 18th, though Lockhart would not rule it out. A new Quinnipiac University survey says American voters disapprove of Obama's performance by 54% to 39%, the worst marks of his presidency. As with similar polls in recent days, most of Obama's problems can be traced to criticism of the new health care plan, including website problems and cancellation notices on existing policies. The university noted that Obama had a 45% approval rating at the start of October, the month the health care plan rollout began. The pay TV industry continues to lose subscribers in the third quarter, analysts estimated on Tuesday, providing further evidence that some consumers are dropping their pay TV subscriptions or cutting the cord, as you might say. Very punny, Shubs. The industry as a whole lost 113,000 subscribers in the quarter compared with 101,000 in the year-ago period, according to a report by Wall Street research firm MoffettNathanson LLC, issued on Tuesday after Dish Network released its quarterly report. Dish was the last of the publicly traded pay TV providers to report for the quarter. MoffettNathanson's estimates include a calculation for performance of privately held distributors. The firm estimates that total pay TV subscribers shrank 0.2% over the last 12 months, ending on September 30th. Royal Dutch Shell and the Iraqi government are nearing a deal to build an $11 billion petrochemical facility in southern Iraq, according to the government here, the latest large-scale move by the oil major into Iraq's energy sector. Shell has already invested heavily in helping Iraq exploit its bountiful crude and natural gas reserves. The company has been developing Iraq's giant Majnoon oil field, which produced its first oil last month, is now pumping some 200,000 barrels a day, according to Baghdad. Shell also signed a $17.2 billion deal last year to collect natural gas from Iraq's southern oil field production. The gas has traditionally been flared or burned off, and Iraq has long had ambitions to collect and use the gas to meet domestic energy demand. Legal representatives from Apple and Samsung were back in federal court in California yesterday, this time to decide how much the Korean firm owes the tech giant for patent infringement. In August 2012, a federal jury handed Apple a big victory in its suit against Samsung when it found that the Korean firm had infringed on several Apple patents for its smartphone and tablet features. The jury fined Samsung more than $1 billion in damages, but that amount was reduced to around $639 million in March by Judge Lucy Koh of the U.S. District Court in California's Northern District. The judge ruled that the jury had miscalculated its estimate of damages. The retrial is to determine how much Samsung should pay Apple in addition to the $639 million. Starbucks said it would pay Mondelez International $2.76 billion to settle a dispute over the coffee shop chain's bagged coffee business. The payment, ordered by an arbitrator, consists of $2.23 billion in damages and $527 million in interest and attorney's fees, Seattle-based Starbucks said Tuesday in a statement. The company said it has adequate cash and borrowing capacity to fund the payment and will book it as a charge to its fiscal 2013 operating expenses. Whether it's PlayStation 3, Roku, or the Apple TV, many of Netflix's home pages are slightly different, creating interface and feature fragmentation. Today, Netflix is taking a big step towards tackling that problem with a faster, more engaging television interface that will put a majority of its living room customers on the same page and let them stay that way. According to Chris Jaffe, Netflix's vice president of product innovation, the idea was to meld Netflix and the experience of watching regular TV, where there's always something on and viewers can be drawn in at a simple glance. And for today's trivia tidbit, today is World Kindness Day. The holiday began in
It's got to be a
1990.
tough one for you, Joe.
You know what? I'm really not that bad. The holiday began in 1998 as a day that encourages individuals to overlook boundaries, race, and religion. We try to be kind here at Benzinga, but it isn't always easy. And with that, I'm going to hand it over to my friend here, Snaky Jake. Jake, I am going to try and be nice to you today because I feel bad last week about saying Brent was my best friend in the news desk, but everybody is my best friend here.
Oh, Joe.
Shucks.
Oh, gosh. Well, guys, I guess with that, I might as well get you guys some movers this morning, tell you guys what's going on out there in the markets. Do have quite a few stocks on the move this morning, so let's get things started. First up, we'll go after Tesla. Tesla's always on the move, but once again, following that trend this morning. Yesterday, Elon Musk was in an interview with CNBC's Andrew Ross Sorkin at the DealBook conference. He did mention that the company would not be performing a recall of its Model S sedans following those fires. So that looks like that's getting traders kind of bullish here. Broke above that $140 level. Last trade I'm seeing is $141.17. It did come down recently. Was about $835. It came down and tested the $139 level, but came back on it. Still some pretty good volume out there. So keep an eye on Tesla during today's trading session. Looks like it's getting a little bit of a relief rally today after a couple of rough sessions. Do also have a couple other ones moving, including Lululemon. That's following an initiation over at JP Morgan. Company initiated at an overweight and an $80 price target. Closed yesterday around $67, so that's given it a significant upside there. Last trade I'm seeing is at 68.30. The report basically focused on the fact that the company's stock price has been held down as of late following the PR nightmares the company's been experiencing. But they did focus on the company's fundamentals, saying that it's still a strong story and that its penetration into Europe is now going to help its bottom line, as will the increased monetization of its online platform. So keep an eye on Lululemon shares there. That's Lima Uniform. Another one we've got on the move today is Starbucks. That's Sandy Bravo Uniform X-Ray. For those of you guys that don't know, shares are moving to the downside. Closed around about 80.50 yesterday. Spiked as low as 78.31, and then has been kind of ticking around on mediocre volume. I wouldn't call it strong volume this morning, but definitely decent there. Spotty trades here and there. Last trade I'm seeing is at 79.15. That's following the large settlement with Mondelez, where the company's going to pay $2.3 billion in charges, $537 million in fees. Company did state, however, that it has the liquidity to do it, so it's not going to need to raise any financing. But traders are still not happy that this money is not going towards R&D or a dividend. So keep an eye on Starbucks. Shares are trading down a couple percent right now. Watch that at the open. It looks like they might be trying to test that $79 level, still below the key psychological $80 level. Could be an interesting one to look at. Joel, what are your thoughts on Starbucks here? With it sitting below that $80 level, I know it's been kind of a battleground recently. Over the last 20 sessions, it's been popping up above and below that $80 level. I don't know what you're thinking on that one.
You're subscribing to the Dennis psychological support and resistance around whole number theory. It's holding up, and now it is trading below it. I think if you get any kind of rally back up to that yesterday's low at 80.12, I think will now be real good resistance that you really have distanced yourself from it. So I'd say look for a couple unless this thing gets a couple closes back above that $80 level. We surely could be in store. I mean, it looks like we're already ready to test the low that you had on November 7th at 79 even. Let's take a look at where we hit in the pre-market. The initial dip, I don't know, quite the overreaction there, would be a 78.31 low. But I don't think you could get too excited about this on the downside here until you break that low at 79 even. If you do, you definitely have that the parameter to look at that pre-market low at 78.31, and that coincides with a couple other lows, but that's a quick take on Starbucks.
Alrighty, going to get a sector update over on some of the retailers. Macy's did report earnings this morning. That's ticker Mike. Company reported EPS of 47 cents, beating analyst estimates of 39 cents. Revenues came in at $6.28 billion versus expected $6.2 billion. So beat on the top line and beat on the bottom line there. Traders are really liking it. We saw a low this morning in the pre-market of 45.76. The last trade I'm seeing is at 49.80. It did break briefly above that $50 level, making a high of 50.22. So shares are on the rise there. This is breaking above its recent range, and that pre-market high is near its all-time high that I'm seeing on its chart. Its all-time intraday high throughout this year, which was 50.77. Joel, do you have any thoughts on Macy's? I'm going to hop into a few of the other retailers after this, but getting close to those all-time highs, or at least for the year, quite a gain from its lows of 36.30 this year. What do you think there?
Good call there on the $50 level, 50.22 high. You've hit that a couple times. Finding minor support at the 49.50 level over the last half hour. Someone's been supporting the stock at that level. Looking at this on a longer term chart, the all-time high is that 50.20, above the 50.22 you have the all-time high at 50.77, and that was back in July of this year. So Got to chew through the stock here at 50.20, 50.22. Don't have Dennis on to let you know what's in the book here, but here's a stock that trades a decent amount of volume here. 7 million shares a day. Closed at 46.33. So off the open, you have to satisfy all the sellers in the book from 43. 46.33, all the way up to where it's trading at now at 49.50, 49.62. Probably a host of other orders at the $50 level. So if you're buying this thing off the hop here, I'd lowball the bid here and see if the specialist or the designated market maker opens it at a point where he can take those offers and then get immediate pop up.
Definitely something we want to keep in mind out there on the market. Let's take a look at some of the other retailers out there. Going to hop into JCPenney real quick. I know you guys briefly went over that earlier today. It has been ticking higher. Last trade I'm seeing is at 848. It's off the highs where it broke just above 855. It is on the rise this morning, though. Volume increasing as we get closer to the open. Yesterday's high was 877, so keep an eye on that. Going to have a look at Kohl's, which is KSS, Kilo Sandy. See how Kohl's is doing there. Kohl's did gap higher and got as high as 58.51. Last trade I'm seeing is at 58.18. Keep in mind, Kohl's is trading on very thin volume right now, though, so that could be a fairly manipulated pre-market chart there. So watch that at the open. But in general, watch retailers after Macy's has reported that earnings beat. Another sector I want to take a quick look at is the solar sector. Always tends to be a volatile one here, and we did have solar earnings this morning. That's Canadian Solar. Charlie Sandy, India, Quebec reported earnings. EPS came in at 56 cents, beating expectations of 36 cents. Revenues came in at 490.9 million, beating expectations of 480.1 million. So that beat on the top and beat on the bottom line. Got traders pretty bullish this morning. It broke above that $30 level, making a high of $30.25. Last trade I'm seeing is at $29.38, so it looks like it couldn't hold above that $30 level, although when it broke below it, looks like there was a fairly thin volume, so still some trading around. It looks like it's trending back up towards that $30 level. Again, just got a trade coming in at $29.40, so keep an eye on Canadian Solar, especially at the open with those earnings. But when you get one solar going, you usually get them all going, so let's take a look at the best in breed in that sector, and that's First Solar. That's Foxtrot, Sandy, Lima, Romeo. Shares of First Solar are actually trading down following that report. Very thin volume in the pre-market. Last traded I'm seeing is at $61, but there were some scattered trades to the downside, so it looks like the market is trending that one down. It may be looking to test that $60 level. It did it during yesterday's session, tested it as low as 60.45, bounced off that and rallied, so keep an eye on First Solar at the open. Let's take a look at some of these other ones, including Trina Solar. That's Tango, Sandy, Lima, Trina Solar there. Another very thinly traded one. It did rise on that Canadian Solar report and is up over yesterday's close. Yesterday's close for Trina Solar was 16.15. Last trade I'm seeing is at 16.22, so not a huge gain there, but definitely something you want to take a look at. The solar ETF in general, that's Tango Alpha November, is also something you want to take a look at. It has not really traded yet. I've seen a couple of moves. Closed right around $40 yesterday. Last trade I'm seeing is at $39.70. It gapped down on yesterday's session, so keep an eye on the Guggenheim solar ETF. It's Tango Alpha November. So solars that we're expecting to see a little bit of movement on today, so keep an eye on that. After the close, we do have a couple big earnings reports, including Cisco, NetApp, Kinross Gold, and the X1. So we're going to get some action in the 3D printing sector and big tech. So a lot to watch there. Now I do want to make sure that we get Brent in here on the line. Brent, do you have anything for us? All right, I guess I'll continue the roll here.
Oh, the market's open.
Oh my, here we go.
It slipped right past you, huh?
I didn't even hear it. There it is. Just heard the
that's
bell.
it.
Got it.
Just taking a quick look at that TAN ETF here before I let you guys take away with the rest of the show here. You do have major resistance in TAN here. You hit the 4170 level on the daily chart. You hit 4170, 4178, and 4182. So let's keep an eye on that as a major resistance in TAN, and I'm going to let you guys take it from here.
Alrighty,
What are we
folks,
going to do without you, Joel?
I know. We're going to be like a couple of lost puppies here. What are we
I
going to
think
do?
someone should call Michael Bolton Tell me, how am I supposed to live without you?
Oh,
Well,
man.
we could have Joe continue singing, or we could maybe go over some stocks. Everyone raise hands for Joel singing.
My hand's up.
Oh,
Yeah,
there's
I'll
two
give him a
hands
half
up.
hand. You know,
I
it
think
wasn't bad.
I think I see like 30 traders out there that have their hands raised for stocks. So we're gonna have to go with that one. S&P is opening at 1757. Pretty volatile right here. Did bounce under 1756. Excuse me, bounce off of just below 1756. Dow Jones right around 15,631. We were covering crude throughout this morning. Crude was very volatile this morning. It is opening right around 93.81 per barrel. I see a morning low right around 93.10 per barrel. Quite a move higher there. Dennis was talking about the old 40 cent trade in crude. I guess that's out the window when it opens. Let's check out gold real quick. Gold did move lower right into the open. Moved about two points lower. Now it's kind of bouncing off that level. I see 12.75.10 last trade in gold. Let's maybe take a look at a few issues this morning. Checking out Green Mountain. Green Mountain shares responding to a report from OTR Global. Let me pull up that OTR report really quickly here. Shares of Green Mountain trading down. Where did it go on my watch list? There it is. Green Mountain trading down about 3.5% on apparently this OTR note. Let me just read through this really quickly. Green Mountain cutting prices on some brands in order to slow the share loss that has been conceded to Treehouse. That is not good news. Comments coming out of OTR Global. That firm usually does move stocks pretty decently. As you can see, Green Mountain shares down about 3.5% this morning. How about NQ Mobile? NQ Mobile with a rough session last night. Company issued a release announcing an executive purchase plan for up to 3 million in shares. The stock moved to a post-market high of 15.24. Then earnings came out just a few minutes later. Shares sold off. I see a aftermarket low at 12.67. I think Joel had a bit of a different quote than I did right there on that low, but nonetheless, stock did bounce a little bit, flirted with that $14 level up until the open. Now opening lower, right around 13.19 at last check. We all know the story. The volatility on NQ Mobile seems that this morning and last night is not a different story. How's Twitter doing? We got Twitter 41.25 at last check. That would be down about 1.5% for the session.
Interesting trend down there in the pre-market too. If you look at it, kind of really followed through on yesterday's chart, just kind of breaking down there. Yesterday, it tested that 42.50, broke right through it, kind of bounced right when it broke below the $42 level, and then battled around that. And now it looks like we've determined that we're really going to break below that. Interesting move there in Twitter.
Jake, do you remember the level that Joel and Dennis were talking about yesterday? It was definitely below 39.50, right? Do you remember what number they were targeting?
I do not remember that exact target, to be honest. But I mean, as far as if we're talking just psychological levels, breaking below $40 on Twitter, and if there was a close below $40, that would be pretty tough. I do see a low not yesterday's, but the session before yesterday's on Monday. That the low on that day's chart was 39.40. That's an intraday low, so that's something to kind of take a look at. I guess that's the all-time low theoretically for Twitter. Then, unless you count its what it priced at.
Yeah, good call on the on the closing low. Doesn't necessarily matter a ton what the stock goes down to throughout the day, but you do want to watch it at the close, and we have not had a close below 40 yet. We are about $1.25 from that level, so we're going to need a little bit of downside this morning and into this afternoon in order to move to that $40 level. Let's take a look at some of the casino stocks really quickly. FBR earlier was initiating coverage on Las Vegas Sands, MGM, Wynn, and also Boyd Gaming. Boyd Gaming is the one in that selection that is not in the Las Vegas market. LVS trading around 70.86. Let me check Wynn real quick. Wynn trading rather sharply lower. I think that Wynn and LVS got outperform ratings. It was LVS and MGM. Wynn and Boyd did get market perform ratings. It looks like the stocks are reflecting those ratings this morning. LVS trading about flat. It's a little bit lower here. Wynn is down. And MGM also trading higher this morning.
If we're talking sector plays here, I do want to hop back into the solars because they do get very volatile. So just again, taking a look at the tan here, still not a whole lot of trading around there. But if we move over to First Solar, what kind of action do we get? Look at that, bounced right at the open. It was trending down in the pre-market, and it's basically taken back all those losses in the pre-market, which I guess wasn't a huge loss. It's about 90 cents, but trending higher here. So First Solar kind of shrugging off those losses in the pre-market, possibly linked to the strength in Canadian solar, which I'll take a look at real quick here. And Canadian solar is also rallying now, following after it let out a little bit of air in the pre-market, following its large run up. Trina Solar, it's getting a little bit of strength, but not quite what I was expecting. 1645 is what I'm seeing right now. Its open was right around 1620. So solar's showing a little bit of strength, but nothing too crazy right now.
And I'm seeing that the S&P is trading around 1761 right now. That's down about 1/3%. Futures are bouncing, however, though, and the indices do not seem to be following the futures. I see the SPY futures up at 1758. That is up from a morning low of 1754, up about 4 points from the low. That's on the futures, though, remember. Not seeing that follow through in the actual indices. Dow Jones did bounce from the open, hit a low right around 820 this morning at 15,613. Now the indices trading over 15,640. There it is, 15,642.
Interesting. We got a move in Pandora here. Take a pop. I want to take a look at that chart real quick. Broke out pretty strongly here at the open. Its all-time high that I'm seeing on its chart this year is 28.77. Now that is an intraday high, and that was made today. So keep an eye on Pandora. We're seeing a lot of strength on that. It's been rallying. Was at the last 4 sessions been showing a lot of strength after pulling back a little bit. So Pandora's shown a lot of strength this morning. Might be one you want to keep an eye on.
Pandora shares up about 6% since since Thursday's close. The stock was down 4% on Thursday of last week, and another 2% on Wednesday. There was an 8% gain on Tuesday, so it seems like just maybe coming back a little bit. Found that we did have a raised price target from Needham yesterday, raising the price target on Pandora from 25 to 33. Needham does maintain a buy rating. Let me do a little math here. That is about 17 or so percent Pandora. Needham expecting about almost 20% upside to that new price target. I didn't actually get a chance to talk about some of the top ratings this morning. Jake, you wanted to fit me in there before the open, but didn't quite work. But I did have some of the top ratings ready, so let me roll those off to you really quickly. Piper Jaffray did upgrade Red Hat shares from neutral to overweight. Guggenheim upgraded shares of Transocean from neutral to buy. And Morgan Stanley, on the show earlier, we were talking about this pair trade by Morgan Stanley. They upgraded shares of U.S. Steel while at the same time downgrading shares of Nucor. U.S. Steel getting an overweight rating while Nucor getting an equal weight rating. Also on the ups this morning, not exactly an upgrade, but Goldman Sachs adding Qualcomm to its conviction buy list. That should be due for some upside based on that call. Looking at shares of Qualcomm trading up around 1% this morning, 69.18 at last check. Following news that Goldman Sachs is adding it to the conviction buy list. Couple of top downgrades this morning. Breen Capital did downgrade shares of Perry Ellis from buy to hold. Perry did issue some quarterly results, I believe, this morning. Get you those number. Actually, it looks like it was just guidance on Perry Ellis. Company expecting Q3 loss in the range of 15 to 17 cents. Analysts all the way up at 13 cents. Perry Ellis shares trading down 20% this morning. Continuing with that guidance, company looking for sales around 220 million. Analysts are up at around 235, and they also did cut the fiscal year guidance. EPS expected now in the range of 95 to 101. The company had previously guided in the range of 150 to 160, a huge slash on fiscal year EPS guidance from Perry Ellis. Sales guidance being reduced from 985 to 995 million previously to a new range of 960 to 970 million. Those are both the sales and the earnings below the street. And Breen a little bit late to the game, downgrading it this morning. BGC Partners downgrading shares of Agrium from buy to hold. Euro firm Panmure downgrading shares of AstraZeneca from hold, slapping a sell rating on that. Susquehanna downgrading shares of Hibbett Sports, that's Hotel India Bravo from positive to neutral. We did talk about those casino names. FBR initiating a new outperform rating on LVS and MGM, and new market perform ratings on Boyd and Wynn. Also at FBR on the healthcare names, firm initiating with an outperform rating shares of Centene, United Health, and Aetna, and with a market perform rating shares of Humana and WellPoint. Jake did talk about the Lululemon initiation this morning. JP Morgan initiating Lulu with an overweight rating, an $84 price target. Firm cited several catalysts. I'll just read those off to you really quickly. Lapping the easier comp and margin comparisons from 2013 Luan recall. Point number 2, appointment of a new CEO. And number 3, Lulu's first European store will be opening in London during the second quarter of next year. JP Morgan liking those couple of points. We have just a few minutes left in the show. Give you a quick preview of some items to watch out for the rest of this week. Tomorrow on the pre-market show, we will be hosting the steady trader, Serge Berger. He will be giving you some details on just how to get those trades set up. Next week on Monday, we will be hosting Tim Collins and Bob Byrne of Retro Wall Street. They'll be talking about their chat platform. And making a return to the pre-market show on Tuesday will be Sanglucci talking about some option strategies. Sanglucci, quite the guy. We had a great interview with him last week, was it? Maybe 2 weeks ago. I think it was last week. Definitely want to tune in for that. Tonight on the earnings front, you will see Cisco report. Analysts on Cisco currently looking for around 51 cents on sales of $12.4 billion. Also, we'll have NetApp tonight. Tomorrow before the open, we'll have Kohl's, we'll have Viacom, and Walmart, the world's largest retailer. Analysts currently looking for $1.13 in earnings on sales of just $116.84 billion. Tomorrow after close, we will have Applied Materials. And on the economic front tomorrow, that is Thursday, we'll have jobless claims, continuing claims. Also, we'll be getting a preliminary reading for Q3 non-farm productivity and unit labor costs. And then on Friday, closing out the week, we will get Empire Manufacturing Index, Import Price Index, reading on industrial production and capacity utilization. And finally, at 10 a.m. on Friday, we will get some data on wholesale inventories. S&P futures trading around 1758.50. Dow Jones futures trading around 15,635. I think that's going to about do it for the show this morning. Thanks everyone for tuning in. See you tomorrow.